Hello and welcome to the midweek trade right here in Lagos, Nigeria. Here's what's coming up in the next 55 minutes. Tanzania moves to lower prices of locally manufactured electronics. And Kenya hits a tourism milestone with record arrivals, earning 452 billion Kenyan shillings. And Trump ends initiative that helps boost electricity access in Africa. That's according to a Bloomberg report. And it's good to have you join us. I'm Ladi Williams. Let's get a check on what's playing out with major commodities that we track, starting with oil prices. Now we're seeing a nice recovery there, 0.40% for Brent, $73.29 a barrel, while U.S. grade WTI, that's $69.18. So it's now below that $70 psychological level. We'll see how long it stays below that level, but it's up 0.40%. We'll see if the recovery gets it back over $70. And to the metals market now, we're seeing gold prices. They're higher today after hitting a one-week low in the previous session. Yeah, we saw sell-offs there with gold yesterday, surprisingly, because analysts were expecting that that $3,000 psychological level will be next to cross there, but we're seeing gold that pulled back yesterday, but it's up 0.1%, $2,918. That's for spot gold after falling more than 2% yesterday, taking it further away from that $3,000 psychological level. The U.S. gold futures, that rose by 0.5% to $2,932. Investors still be keeping their eyes on gold, and we're still watching if central bankers will continue accumulating gold in 2025. Two other stories now. We see economic think tank, that's the Center for the Promotion of Private Enterprise, that's CPPE. They're saying that Nigeria's 3.84% GDP growth rate recorded in the fourth quarter of last year reflects both the gradual recovery of the nation's economy and resilience of local entrepreneurs. The Chief Executive Officer, that's Dr. Muda Yusuf, made this assertion in response to the latest report released by the National Bureau of Statistics, attributed the growth to the impact from the services sector, particularly from the hospitality subsector. He explained that despite the daunting macroeconomic structural headwinds, the services sector continued to outperform the real sector of the economy, largely due to persistent structural impediments affecting real sector productivity. Meanwhile, the NBS is expected to release the country's GDP report under the rebased data within the second week of March. And we see more reactions there, trailing the latest GDP report released by the National Bureau of Statistics yesterday, which has risen to a three-year high. Speaking on Business Morning earlier today, economic expert Mr. Shuaibu Idris, who is the MD and CEO of Timeline, says the government needs to maximize some existing and untapped opportunities, such as the country's population, in order to further improve the economy. While citing the impact of the services sector's significant contribution to the GDP growth in the last quarter of 2024, Mr. Idris asked the government to take immediate and necessary steps to address some of the prevailing economic issues. Take a listen.
Maximize the opportunities that are before you. We have a country, the average age of our population is somewhere around 17–18%. We have population to our advantage, but are we getting the dividends of demographic, statistics that we have? The answer is no. Are we taking steps to seize this opportunity and make the economic activity to even be better? I don't think we are anywhere near. And as long as we continue to be in self-denial or delusion, we will continue to be where we are. This economy indeed can be the $3 trillion economy that President Bola Ahmed Tinubu wants us to get. But are we taking the necessary steps to achieve the objective of what Mr. President wants to achieve?
With a growing adoption and demand for compressed natural gas as CNG as a cheaper alternative for fuel in Nigeria's energy transition initiative, the challenge is now the part of accessibility and availability. And this is according to an industrial expert, Mr. Derek Ewelukwa, who's the managing director and CEO of Jet Motors Company. Speaking on Business Morning also, Mr. Ewelukwa called on the government and major stakeholders in the industry to intensify their efforts in making the product more easily available. Take a listen.
The acceptance of that energy source is beginning to take shape. I think now what we're battling with is the issue of accessibility. As long as we get the affordability buttoned down, we get the acceptability, and we get the availability, now, the accessibility is what we have to tackle. I say that because I see the demand has tremendously increased with respect to people trying to get their vehicles converted to run on CNG. And even you go to the CNG stations, you find lineups. So that tells me that people are beginning to key into this source of energy, or this alternative source of energy to power their vehicles. It is cleaner, it is cheaper, and it's affordable. So I think we now have to try to solve the accessibility issue. There are lots of private sectors going into that space now. Government is also boosting that sector, and as I know, in the near future, the accessibility issue will also be solved. The last time I was here, it was the acceptability. Everybody was kind of gauging, would they really want to use this energy source to power their vehicle? But I think we've gone over that. People are beginning to find out that the CNG is okay. It's good to drive your vehicles on CNG. Now we have to solve the accessibility issue.
And that was Mr. Ewelukwa earlier with Ini John McQuarrie on Business Morning. You can catch more of that on our YouTube channel. All right, let's get to our first conversation now. And we're looking at food security in Africa. That's facing growing crisis at this point, with millions of people struggling to access sufficient, nutritious food, with climate change, conflicts, and economic instability compounding, the challenges, leaving vulnerable populations at greater risk. Well, joining us and giving us solutions for this problem now, we have Ramesh Muchikal is the CEO, Africa Improved Foods. Joining me via Zoom. Great to have you on the show. Good morning. Well, good afternoon.
Good morning, and thank you for the invite.
Yeah, it's actually afternoon at this point. I think I'm still trapped in the morning. Well, so we've been talking about, food security in Africa, for the longest time now. Talk to me about how, stakeholders, like yourself, how you're contributing to economic development by, providing, some kind of affordable alternative when it comes to, feeding Africa.
Right. So food security is a very old topic as a challenge that Africa is facing. But what we do is one step ahead of that, which is nutritional security. And very few people are talking about that. The problem with not talking about nutritional security is that providing food security largely takes care of carbohydrates and cereals, while nutritional security ensures that the next generation is healthy and wise and skilled for taking on their responsibilities thereafter. What we do is produce nutritional food in a state-of-the-art factory in Rwanda for supplies into the World Food Programme, UNICEF, Red Cross, and of course, very strong government of Rwanda schemes that feeds children and pregnant mothers. The primary purpose of this is to battle malnutrition and to prevent stunting. Now, if I go back to your question about food security, our biggest challenge as Africa is that we don't have adequacy. We are not producing adequate amount of food to feed ourselves. Once the adequacy is taken care of, then it becomes a question of availability. How much of that becomes available to our people? After you make it available, do you make it accessible to our people? Because don't forget, a lot of our people are sitting in deep rural areas. And once you've done all of this, is the food affordable? Because after doing all of this, if the food is not affordable, what's the point?
With your experience in Africa, are you seeing, some kind of improvement, when it comes to, food security on the continent?
I'll be selective about that answer because I'm seeing some progress in patches. Rwanda is one good example. Nigeria has some good examples. Ivory Coast has had some good examples. So at different scales, there are some good examples. The problem is our population is growing at a significantly different pace from the rest of the world. Number two, therefore, our population is young and needs food to grow. Okay, and that growth is not just physical; it's also mental, like I mentioned earlier. Are we producing enough food to take care of that growth? No, we are not. Is our food import bill increasing every year? Yes, it is. I'm sure you're aware that 2023, the food bill was $50 billion, and by 2027, it's expected to become $100 billion. Now, remember, our economies, our currencies are devaluing. So, affording $100 billion in terms of foreign currency is one big challenge. Number two, our economies are not getting any stronger to be able to afford that kind of a food bill. So we really have to build a food economy that can bridge this gap.
All right, talking about bridging the gap, what are you seeing for, public-private partnership models that can help, build some of these sustainable business, processes that can actually help to, challenge or address most of these social challenges we're seeing, like, malnutrition?
We are a perfect example of a very successful PPP. So Government of Rwanda, IFC, FMO, which is a Dutch development bank, and a significant Dutch international private company called Royal DSM have collaborated to put this up. Now we are profitable, but profit is not our real metric because we are a social impact organization. We are feeding 1.6 million people per day to help them prevent malnutrition related issues. Okay. So this is a perfect example of how a PPP can work. The big advantage of that, of course, is that the government ensures that their priorities are met. We as the private sector are able to execute well and keep a focus on the profitability and therefore the sustainability. Most importantly, because we are private sector, we bring efficiencies that ensures that every player in the chain is benefited. So for example, we work with 90,000 farmers. They are benefiting significantly by our engagement. We employ 600 people in a factory, like I said, is state of the art. Therefore, they are upskilled. And because we are feeding 1.6 million people through the World Food Program and the government of Rwanda, there is a direct beneficiary that is getting the benefit of our factory there. So like I said, this is a great example of how PPPs have worked. And I think we are a standing example of how it can succeed.
And talking about, profitability, because, companies, you go into business so you can be profitable. How do you think consumer good companies can balance affordability while maintaining, profitability, for their business model?
That's a great question, and I think a significantly unaddressed question across Africa. Because if I show you the African population, there are 400 million people in Africa who earn less than $2 a day. That's absolutely the bottom of the pier. Okay. 400 million people is a lot of people because that's more than the population of all of Europe. We are talking of these people not having a steady income and at best earning $2 a day. Then there are 700 million people earning between $2 and $10 a day. All right. So we have already talked about 700 plus 400, 1.1 billion people in that patch who are earning less than $10 a day. That's a very large chunk of our population. And I believe there are not enough products and services that are catering for them. So what we do, for example, because we are a social impact organization, is we have different pricing for the same product for different segments, because our purpose is to reach those populations that can't afford nutrition. I would imagine that FMCG companies that are profiting big time from the top end of the segments, which can pay a serious price for their product, should be able to subsidize the product down the line. Number two, the pack sizes must change so that a person who's earning $2 a day can afford to buy food for the day. Because, as you can imagine, at $2 a day, he cannot afford to buy food for the month. So packaging size should be able to cater for that. And the third thing is reach. I think the biggest challenge in Africa that FMCG companies face is that distribution reach is inadequate. Therefore, the last mile customer doesn't get the product. When you don't do that, you're missing out on a significant part of the population, and bulk of them are at the lower end of the economic scale.
And, it's still early days in 2025. What do you think, governments and, private sector, what do you think we should be doing or concentrating on, right now to make sure, food insecurity becomes a thing of the past in Africa?
Okay. The bad news for you is that whatever we do in 2025, food insecurity is not going to become a thing of the past. Our biggest challenge right now actually is climate change. And I can say this because, I'm not a researcher or a consultant. I'm a practitioner. I am seeing this every day in talking to farmers, meeting farmers, traveling around the continent. The big challenge is that because more than 90% of African farming is rain-fed, they are dependent on the hand of God. Okay, that has to change very rapidly. And I'll give you one small example. Cooperatives in Rwanda, all farmers in Rwanda are organized around cooperatives. Cooperatives in Rwanda are mostly irrigated. And today they are able to produce maize, for example, at approximately 6 to 8 tons per hectare. Just as a reference, the African average of maize is less than 2 tons per hectare. The South Africans who are at the cutting edge of farming technology are at approximately 5.5 tons per hectare. So these Rwandese farmers in cooperatives that are rain-fed, are irrigated, are able to produce more than the South African farmers. We will need to do things like this to innovate and make our farmers more empowered so that they can produce more food. When they produce more food, there is adequacy. When there is adequacy, we start the 4 pillars of food security.
All right, definitely, so much to unpack there, and we're hoping, that, going forward, we start to make progress, even if it's, gradual. But it was great, having this conversation with you. Ramesh Mujikal is the CEO, Africa Improved Foods. Thank you for coming on today.
Thank you so much. Thank you for the time.
All right, we'll take a break now. When we come back, we'll head straight to the market. Let's just find out which markets are having some kind of rebound today. That's in a moment. Just stay with us. Welcome back. Let's get a check on the markets now. We have Anita Edet with the details on what's playing out with most of the markets that we track. Good to have you, Anita.
Yeah, good afternoon, Ladi. Well, before I tell you about the markets at intraday, I want to ask you a question.
Right.
If you had 7.49 or about 7.5 billion naira, what would you do with it?
Me? Wow. I need some time to really think about that.
Okay.
Yeah, but I'll just try and multiply it somehow so I don't go broke.
Yeah, because we had it in our news, I'm sure it's across the newswires, that to get a Trump visa, gold visa card, and in order for you to become a U.S. citizen, you would need about $5 million, which is approximately that amount. And we know that many Nigerians are itching or have been itching to go to the U.S. We also know that some people would say, yeah, I might as well take that money and become a U.S. citizen.
Right.
But when you look back into the country and just consider that amount in naira value, what can that amount do? Can it buy you a company? Or maybe would you take it to another country and
I can definitely buy you a company in Nigeria.
Rather than be a US citizen.
Some need that economic freedom, in the world. So they would like to buy that citizenship, but it's quite a sum.
Okay, but when you now put that amount, how does that also translate into the overall value of one of the stocks on the Nigerian, on the local bourse?
Yeah, that's
as well as the market capitalization.
Yeah, it's higher than some stocks listed.
Exactly, Ladi. I think I might as well just buy up one of the
companies, right?
Exactly.
And hopefully it stays profitable and gives you back returns, so you don't have to buy the citizenship.
All right, Ladi.
Quite interesting.
All right, thanks for that answer. But so let's get deeper into the business of the day, which is the stock market reportage, which we have the intraday market numbers coming in from 4 of the major African equities market that we track, always starting from the home base here. 0.02% intraday gain for the Nigerian bourse, 107,807.88. That's the last number that we saw just about an hour ago. We see the year to date is about 4.72%. It has reduced in value terms. The market has lost about $215 billion naira, but that's no thanks to the impact of profit taking on about 48 equities there. But you see the market at intraday still trying to make some comeback there at that number, which we see, which is not too far from what it closed for yesterday. And for the Johannesburg Stock Exchange, we see that 0.68%. That's more than half of a percent gain at intraday, 88,347.44 for that South African bourse at intraday activity. While for the other markets that we track there, for the EGX as well as the Nairobi Stock Exchange in Kenya, we see the markets also being mostly in the positive terrain there for both for Tuesday as well as for intraday for the EGX and for the Nairobi Stock Exchange. And now talking more about the Nigerian stock market. Well, yesterday we talked about the market reacting to that FGM bond auction being carried out by the Debt Management Office. So the effect that it had, first of all, on the fixed income market, but we know that there's a correlation between the fixed income market and the equities market. So this time, in terms of the yield and the reaction to investors within the equities market, let's catch a glimpse of what impact that had for the local bourse. And we have Abiodun Adedotun, equity trader with FBN Quest, to tell us more about that, as well as the intraday movement of the equities, the stocks listed on the NGX. Thank you for joining us, Abiodun.
Thank you very much, Victor. It's good to be here again.
Oh, yeah. I'm back, and I'm glad to have you again. Okay, so now my first question has to do with the FGN bond auction. I'm sure you've been tracking that as well. So how did investors react to it, especially when you take a look at, I know the market didn't really take a look at the GDP numbers, which came in quite significantly at a 3-year high. But how did the market react to the FGN bond auction, which is the very first for the year?
Yeah, yesterday we witnessed profit taking, especially among banking counters, and pretty much what we attribute it to is a little bit of asset reallocation. Of course, we know there's been so much being said around about the interest rate regime being high, and the CBN governor has come out to say it's not sustainable for us to continue to keep rates this high, but it looks like this is the beginning of the descent in flight for the interest rates. And of course, we've seen quite a bit of corporates trying to take a bit of advantage of the last days of this high regime of interest rates. So we've seen a little bit of sell-offs, but the market is holding steadily right now in many names.
Okay, so now we know that Nigeria's economy, at some point we have this, there's still some macroeconomic challenges. But so far, what are the things shaping the equities market within the last 3 trading days of February?
The key driver is going to be earnings. You recall many of these companies have had, for those that have the year end December 31st, they've announced the unaudited results for the year. So we expect others to announce the earnings season to kickstart in full, and companies to begin to come out with corporate actions, particularly the banks. All eyes on the banks. They've come to raise capital, and investors are gearing up to see how the returns on these investments is going to begin to pay off. So the market is a bit anxious about what these companies will do, and I think that's what's going to drive the next 3 days.
Okay, so Abiodun, so my final question would be, what other things should the market expect within the banking sector, the bigwigs, the ones that we call the fugas? Because I know that as of yesterday, we saw a lot of profit taking on the likes of Access Bank and other the tier 1 lenders. So what are we to expect besides the numbers of which are expected to come from the earnings?
Already we've started seeing a little bit of cherry picking, in select names. It's not as profit taking as we witnessed yesterday. And of course, profit takers also are beginning to take a step off the gas. We expect the market to maintain a lot of stability in the coming days for current levels. We don't expect to see so much knee-jerk kind of reaction going forward, at least to the end of the month.
All right, Abiodun, so I think we'll just leave it there for the markets. And I know that the market, but currently, can you tell us how is the intraday market movement for the all share index, which has been oscillating a little bit in between 107 and after dropping a little bit from the 108,000 points?
It's pretty stable. It's very, very stable. It's all calm here. The volumes are not coming in as you'd expect. Investors are approaching it cautiously, though we've seen a little bit of sell pressure, sellers indicating willingness to sell in big lender like Zenith, right? It's been stable for what bank has gained. GTB is a little bit under pressure, not so much volumes going on there. So it's been pretty much stable. I expect the market to close around these current levels.
Okay, so now in terms of earnings, I know that in some other countries, particularly in the United States, as well as some Middle East stocks, Middle East markets, they're still in earnings season. This is for Q1 is just about a month before we get into Q1. But let's talk more about some earnings recorded in Q4. Are we to expect any other earnings from any of the listed equities on the domestic bourse?
Yeah, of course. We're supposed to expect. Seplat just announced that they will be announcing their Q4 on March 4th, and there will be an analyst call. The big banks, those that are going to be coming up with the full audited numbers will come to announce theirs before the end of March. I think GTB, Zenith, and a few others, you understand. So we would expect to get more, you understand, between now and the end of March.
Okay, Bill, so I think we'll leave it there. And of course, look out for how the market ends midweek trading session and then count down to the end of February into the first week of March and next week. So thank you so much for your time on our show.
You're welcome.
That was Abiodun Adedotun, equity trader with FBN Quest, giving us details about Nigeria's stock market, earnings, and what to expect from those of you who are investors as well as those who are intending to invest in the domestic bourse. Okay, so now from Africa, we go to the Middle East, and the Middle East, we see a kind of a mixed picture there. Only the United Arab Emirates stocks, the indexes on the United Arab Emirates, that's talking about the Dubai index, as well as the Abu Dhabi index, were in the green, 0.27% for the Dubai 5,356.81, while the Abu Dhabi index up by 0.18%, 9,629.10. But it's on the reverse side for the Saudi Arabia and the Qatari Stock Exchange. And of course, we know that these are mostly Muslim countries' stock markets. So they're counting down to the Ramadan, which is the fast season or fasting season, which begins on Saturday. So we'll look out for how this market will close, which is on Thursday tomorrow. But so far, it's still a mixed picture if we can have that for the Saudi Arabia and the Qatari Stock Exchange, which were in the red for intraday market numbers. And now we move from the Middle East, we go over to the US market, the stock futures there. They're up. Dow Jones Industrial Average, the S&P 500, and the NASDAQ. Talking about the NASDAQ, we saw that yesterday there was some reports that came out. First of all, we saw the consumer confidence report, which all made a dent on most of the stocks there, even riveting over to the Asian markets. And one of them, which is now the shares of Tesla, which fell by about 8% on Tuesday and is down by about 25% so far. As it made the market index, that's NASDAQ there, to go down to about some 1.5% so far. And then the market so far is in the green and looking out for Nvidia, which is the darling of, that's the artificial intelligence darling and one of the world's largest computing giant stock there. So Nvidia's report will be out at the closing bell today. Markets is bracing up for that. And of course, what to expect from the market is expecting that quite a number of some economic reports will be out, and traders will be looking out for all of those reports. But like we mentioned earlier, that we saw that we're expecting that the personal consumption expenditure index report, which will be out on Tuesday, which is what the Fed, the US Fed, prefers as its inflation gauge before it makes its own move in terms of interest rates decision. So that will be out on Friday. So all eyes out for that, as well as some other economic data, which will be out from the world's biggest economy. But for a review of Tuesday's trading session, let's bring in our Washington correspondent, Maria Bird.
The U.S. stock market was mixed on Tuesday as the Dow Jones was up at 0.4%, able to climb out of a decline earlier in the day, while the S&P 500 was not able to do the same, closing at 0.4% down. And the heavy tech Nasdaq closed at 1.3% down. Companies like Nvidia are having a bit of a challenge with tariffs and what this could mean for the company's revenues. It is also clear that the U.S. economy is watching to see what are impending tariffs for Canada and Mexico, set to be put in place next week. While the U.S. economy is hopeful, they are watching to see how the tariffs could have a larger impact on the U.S. economy for a longer period than once was expected.
Our Washington correspondent, Maria Bird, giving us details about the performance of U.S. stock markets for the close of Tuesday's trading session. Now, finally, from the U.S., we move over our final destination, which is in Asia. And we saw that most of the stocks there were in the red. We saw that Japan's benchmark index were in negative territory for a second consecutive day. South Korea, yesterday we saw that the market was in the red, but is a little bit in the pickup after the country's central bank, that's the Central Bank of Korea, cut interest rate from 3% to 2.75%. That's about a quarter of a percentage cut. So we see the market index up by 0.41%. We're talking about the Nikkei here. The Nikkei is down by about a quarter of a percent. The Hang Seng Index on Hong Kong, that took the biggest haircut there, 3.27% down at about 23,787.93. And for the other two market indexes, that's the Nifty 50 as well as the Shanghai Composite. Where the Nifty here, we saw that the Nifty is down by about 0.3%. This is India's stock market, and that's also one of the two major benchmark indexes. We have the Bombay Sensex and now the Nifty 50. But when you talk about India, why India is in the mention at the moment, it's trying to get Tesla, which has not been performing so well on in the United States, and it's also a U.S. company, but India is trying to lure Tesla into building one of the plants there. Let's not forget that we have Apple there, which moved some of its factories from China into India, and now India is trying to bring American country into the country, and in the midst of Trump's tariff threat, which has caused a lot of headaches for companies as well as some investors around the world. So we'll see how that turns out. But at the same time, Tesla is yet to respond to that from that call from India's government. So Ladi, that's a wrap for the market.
Right. Yeah. So much to look out for today, especially that Nvidia report, and definitely that will shape what plays out with the Nasdaq, today. And I'm sure also Bitcoin will be impacted by that because somehow Bitcoin and the Nasdaq have some kind of relationship there. But going to the local bourse now has been quite interesting. February, so far for the first MPC meeting in 2025. They closed the week, in the green. That's the all-share index. Also, Valentine week, it closed in the green, too. So the month of February is about 3% up, so far. So I
think it's 3.2%.
About 3.2. So I guess it's safe to say February was green for the local bourse.
Well, Ladi, I think I lost my count on how.
Yeah, just remember you just got back.
Exactly. I'm still smarting from that vacation. But so far, like you mentioned, 3.2%, not too bad.
Not too bad
for a shortened month of February, just about 28 days. All the rest are 31 days.
Right. So outlook for March at this point.
Yeah, but I'll tell you, beware the eyes of March if you're familiar with that. The
eyes of March. Thank you so much. I need to begin with the details of what's playing out with most of those markets that we track. But I'm over to Europe now, where Ukraine is on the verge of signing a minerals deal with the U.S., a deal like This would see some security protection for Ukraine after U.S. President Donald Trump completely turned the country's Ukraine policy around. For more on this now, we have Vada Emrak, the DW correspondent in Berlin. Great to have you, Vada. So Vada, we know the deal is not yet signed yet. Okay, I'll try and get Vada back there. I think we lost the connection with Vada. But let's look at stories in Africa now. We see President Hakainde Hichilema has just returned from a state visit to Egypt, where he met with President Abdel Fattah al-Sisi to deepen economic cooperation and explore new avenues for investment and trade between the two nations. Throughout the visit, President Hichilema held in-depth talks with his Egyptian counterpart, highlighting Egypt's progress in sectors such as infrastructure, tourism, agriculture, and healthcare. Both leaders, they committed to strengthening economic ties through collaborative public-private partnerships. The visit wrapped up with a joint press briefing. And to Tanzania, they're taking a decisive step to reduce the prices of locally manufactured electronics as part of its broader strategy to boost the country's technology sector. The Information and Communication Technology Commission, that's responsible for overseeing the implementation of the national ICT policy and driving sectoral growth, has ramped up efforts to support local investors in the technology manufacturing space. These initiatives are aimed at fostering a more competitive market, improving access to affordable electronics for Tanzanians, and encouraging innovation within the country's rapidly evolving tech landscape. By strengthening local production, the government hopes to reduce reliance on imports while creating job opportunities and stimulating economic growth in the country. All right, I think we have Vada now. Great to have you, Vada.
Great to be here, Laddie. Hi.
It's good to have you. So we finally have this deal. It's not yet signed. It's not signed yet, but what do you think is on the table right now?
Yes, Ukraine's prime minister just confirmed not too long ago that the minerals deal will go through and that the final version of this deal is being drafted up by Kiev in Washington. But key details are still absent. There are no numbers revealed at the moment, and neither is there any confirmation about what kind of security agreements are being offered to Ukraine. But there are reports that the Ukrainian president, Volodymyr Zelensky, will be heading to the U.S. in the next 2 days. Now, what we do know about the deal is that this agreement will include the setting up of a joint fund in which both countries will add money to be invested into Ukrainian projects. The deal is also not new. It was first proposed by Zelensky late last year, October, I think. The idea is to allow the U.S. access to Ukraine's rare earth and other minerals worth trillions of euros, which are crucial for developing EV batteries, smartphones, and other electronic gadgets. And these minerals include lithium, titanium, graphite, all of which Ukraine has. How much is still a big question. Ksenia Orenchak of Kiev's National Extractive Industry Association told DW in a recent interview that these three minerals have the strongest potential in Ukraine, but that there needs to be a more recent assessment of the quantities. Many of these valuable minerals are unfortunately in Russian-occupied territories of Ukraine. And reportedly, Moscow has offered Washington access to these minerals as well.
But all this while, the U.S., they've signaled a move, towards Russia. How is the EU viewing this?
Yeah, I think it's a really strange time, Laddie, because the U.S. on one hand wants to secure these trillions worth of minerals from Ukraine, and on the other hand is voting with Russia on international fronts like the UN Security Council. Even today, Russian presidential envoy said to local press there that Washington and Moscow are keen to find joint projects together and work together in the near future. Europe is now very much aware of Trump's changing policy on the Ukraine war, and there is a lot of talk of fractured or even broken transatlantic ties, and what a Europe without U.S. backing would mean and look like. So I think if this deal does go through and the U.S. manages to provide Ukraine proper security protection, Europe would view this deal favorably, only if it helps to bring an end to this war ultimately. But on the topic of Donald Trump aligning himself with Vladimir Putin, this is extremely concerning for the European Union.
All right, let's turn to the markets now. What are investors keeping their eyes on in Europe?
While stocks across Europe rose and Ukraine bonds moved higher as well on this minerals deal news, it seems that European markets and even currencies, euro and other European currencies, are taking this mineral deal as a sign of U.S. security guarantee. That's what analysts here are saying. Stocks in Hungary were up 1.6%, and Poland's WIG 20 index was up 1.3%. Prague's SE index was also up 0.7%. And DAX is still rallying on a high, currently at 1.4%, outperforming peers. Shares of Germany's reinsurance company Munich Re rose at 5.3% this morning after they posted their annual profit that beat even the most optimistic estimates. So analysts here are saying that after closing the year 2024 on a rather pessimistic tone, European stocks have only risen, and now the balance is shifting slowly in Europe's favor.
All right, we'll keep watching that balance. Thank you so much, Vada, for the details.
Thanks, Ladi.
All right, let's take it to East Africa now. We see Kenya's tourism sector. They've achieved a historic milestone in 2024, welcoming a record 2.4 million international visitors, marking a 15% increase from the previous year. This surge in arrivals is translated into significant economic gains, with the industry generating about 452 billion Kenyan shillings. That's about 19% revenue growth. And according to the Tourism Cabinet Secretary, she attributed this success to strategic interventions, including product diversification and digital transformation. Looking ahead, Kenya is on track to attract 3 million visitors in 2025, with projections to further boost its tourism revenue to about 560 billion Kenyan shillings, enhancing its position as a premier global destination. An ambitious U.S. initiative aimed at boosting electricity supply across Africa has been abruptly dismantled by the administration of President Donald Trump, ending over a decade of efforts to address the continent's energy challenges. According to a report by Bloomberg today, said that they revealed that nearly all of the Power Africa programs they're slated for termination, with a significant portion of its staff being laid off. The initiative, which had sought to increase access to reliable and affordable energy in African countries, has been a cornerstone of U.S. foreign policy in the region, but its sudden disbandment raises questions about the future of energy development on the continent. And I will also see in South Africa there with the G20 summit there with President Cyril Ramaphosa also outlining what South Africa stands to gain in 2025 and what they need to do to stand a chance to also play in the global economy. Let's take a listen.
This meeting today of the G20 finance ministers and central bank governors will in many ways provide further substance and strategic direction in advancing this collective responsibility, I believe. The G20 finance track has been playing this vital role for 25 years. At crucial points in our recent history, it has been able to galvanize actions with significant impact. And it was this forum that in 2008 engineered the world's response to the global financial crisis, as well as being able to mobilize the necessary financial support to enable economic recovery. So the G20 played an important role in responding to the Eurozone crisis and in maintaining global financial support and stability during and in the aftermath of the COVID-19 pandemic.
All right, now let's get a check on the markets now. That's talking about the crypto space. We know it was a bloodbath yesterday. Let's see if there's some recovery. I'm looking at Coin 360 to see the color in the market. It was full on red yesterday. If you can put up Coin 360 now, let's get a check on what's playing out, because Bitcoin fell below $90,000 for the first time since November. And interestingly, we also saw that Tesla, their market cap also dropped below the $1 trillion level. We know that relationship between Tesla and Bitcoin, but there's some kind of recovery, at this point. It's all green on the screen, with Bitcoin up about 1.21%. But is Bitcoin out of the woods yet? I guess we still have to find out. But XRP with a big move, about 8% up. And we also see TON in the green. Ethereum holding up 3.73%, up $2,492. But let's get a check on how the market is feeling. That's the crypto market. I'm talking about the fear greed index. Yesterday, we did see extreme fear in the market, and I wonder if it's still extreme fear, but I think there's an improvement there, about 21 points, showing that investors are not feeling that greedy like they've been used to into the first quarter of 2024. It's been extreme greed, since most of 2024. All right, let's look at the headlines in the market now. We see AI crypto tokens, they're surging with the they're leading the front line this time. There's most of these artificial intelligence coins, and most of them are posting double-digit gains. I think the optimism is around Nvidia's upcoming fourth quarter earnings. That's due today, so I guess they're front-running the market. But Bitcoin still remains in murky waters, even though these AI coins are going up. Then we're seeing Solana. That's just 30 days. Solana is down about 37%. Could be maybe the memes are not getting that attention, so far. But Solana has rallied so much, since the beginning of 2024 into 2025. Then we see PayPal just trying to expand their PYUSD stable coin. They're trying to generate more products for cross-border payments. Where PayPal, they're quite big, stable coins this year. All right, let's bring in Shehu Dania now. Shehu Dania, he's the CEO of Alpha Geek Technology. Hello, Shehu, great to have you.
Hi, good afternoon, Ladi.
Good afternoon, Shehu. So, I don't know, the bloodbath we saw yesterday in the market, was it a surprise, to you, or is this something you expected somehow?
Definitely, it was expected, because if you look at the trade tariffs that were given by President Trump, kind of like was a large factor. A lot of investors were already, get scared, and they moved from higher risk assets like cryptocurrencies. So a lot of people definitely wanted to take their money out. And then we also referenced the hack on Bybit exchange that happened last week, or that was announced last week. And a lot of people started losing confidence, and people, a lot of investors who decide, well, let me go to a safer, asset class. And of course, definitely the stock markets also added. So that there were few price drops. Of course, that's also attributed to President Trump's trade tariffs. And some, across different countries, regulatory scrutiny, Federal Reserve policies, and a lot of high interest rates are also factors that made so it was expected. However, a lot of people sold off to exchanges, people dumped, and now we're seeing a recovery, because I think over $1 billion was actually sold off, and a lot of people's trades were liquidated, and now we're back to getting people's interest, and we're seeing the markets recover.
Yeah, with billions of dollars liquidated, yesterday, those were people that believed or expected that Bitcoin would go up, and they got wiped out yesterday. So tell me, Shehu, how do you manage, market sell-offs like the one we saw yesterday in the crypto market?
So pretty much, I think the major thing is, risk management. That's what's most important. You have to be able to prioritize risk management, so you avoid over leveraging, and you only invest what you can afford to lose technically. And we focus on the fundamentals. So if you're not a day trader and that's not your business, you probably focus on buying and investing long term. So you do not need to watch the market. Because if you look at Bitcoin, for instance, year on year since inception, it has actually been performing as one of the most, it's one of the best performing assets. So if you don't look into those little macro daily trades and daily things, we believe that people will not panic and sell all the time. And then we should also look for projects that have strong teams, that have solid technology, good real world use cases, and every time we should always just diversify our portfolio. Times like this, you just have a little bit as your reserve that you can use to buy the dip. I mean, that's dollar cost averaging, basically. So buy the dip, you're able to average out your cost.
Yeah, Sean, so you did mention, year to date, in 2024, I think Bitcoin was up over 100% so far. But, it's quite funny and interesting that no matter how much an asset class, goes up in value, once it starts that pullback, people always panic.
Yeah, nobody wants to lose money. that's what it is. And everybody's trying to lock in their profits. That's what. But I mean, basically, it's difficult, So the people who actually are day traders who trade on a regular basis, they do not trade with emotions. They have their set targets, and when they get to those targets, they actually cash out their profits. So the major thing that most people should know as traders is that you need to know what your base currency is. If your base currency is USD, you focus on increasing the value of your USD. If your base currency is in Bitcoin, one Bitcoin will always be one Bitcoin, one Ethereum will always be one Ethereum. So you focus on what that is. So whether it goes up or down, you know that one Bitcoin is still one Bitcoin. That's what you have. Even if it goes to $1, it's still one Bitcoin because you focus. You have to think that way. And then if you are trading for profit or you're trading, you have to establish what you are trading for. If you are trading to increase the value of your USD, you will always try to aim to sell, whatever assets you have when it's up, and then you buy back when it's down. So that way you lock in your profits, you increase your gains, and just watch the market. There's no need to be sentimental about it.
All right, now we're already seeing complaints. So on social media, some traders talking about buying the dip, but the dip keeps dipping. So what do you think should be the strategy at this point? Because some might be on the sidelines now, trying to find ways to or a price level to actually enter the market back. But how low do you see Bitcoin going?
I really can't tell, and but the truth is, for anyone who wants to enter the market, you just have you set your mind to what you can afford to come in at. So if you say you want to come in at 75K, truth be told, it might be for 1 second, it might be for a split second during the course of the year, but there's a possibility that the market will dip and those your orders will get filled. So you set that and then you take your mind off it. You believe that you invested at 75, you believe you invested at 60. If it never hits there, well, your money is still available to you. Your capital is not lost. So as opposed to buying at the top and then selling low out of panic. So most times people just need to focus on their strategy and of course focus on the long term.
Right. I guess don't try to beat, Mr. Market. Just, set your own targets at this point. So we're all expecting results for Nvidia. Fourth quarter results, that would definitely shape what plays out with the tech-heavy NASDAQ. But do you think, Nvidia might outperform, somehow outperform expectations today?
We'll keep our fingers crossed. But I really can't tell, So most of the time, because most of everybody else, like the Chinese who rolled out their new AI model, with the claim to be less expensive. That's part of what made people sell off Nvidia stock, believing that these things could be done cheaper and nobody will they can actually get better performing chips. And of course, everybody's still thinking about quantum computing, but that's still light years away. However, I believe very much that they're putting in a lot of work. The team is strong, they're dedicated, and they have a lot of other things going for them.
All right, let's hope Nvidia, I hope they don't go deep seeking today with that result. But thank you so much, Shehu Dania. Thank you.
Thank you. Thank you very much for having me.
All right, so that's how most of the markets we track are looking today. We'll definitely be giving you more details for that Nvidia report. You get the full details tomorrow and how the markets are reacting to that. Thank you so much for watching. I'm Ladi Williams from the team right here at Channels HQ. It's bye for now.